Hi friends, welcome to Banking Basics. Today we are going to see about the Islamic banking basics. Islamic banking concepts, it's very big. Here I will cover only the very synopsis or abstract. First, we'll compare between the existing banking concepts where we have capitalism, Islamic, and communism. I'm keeping Islamic at the middle because it is between the capitalism and communism. Let us see how it differs. In capitalism, deposit or loan rates are agreed upfront, meaning we know that we will get when you go for the deposit as a customer, you will get the profit back, and sometimes profit rate is fixed, or sometimes it's backed with the rate code in the market based on the fluctuation or this one. So definitely, you know for sure that we'll get some profit or interest back. Whereas in Islamic, profit is shared and rates are declared after the results. Meaning, you go for a deposit and bank inverts that amount into the something else, and based on the return, they declare the profit rate. Meaning, it's a profit sharing basis. So whatever the output or whatever the profit they get from the investment, that is what shared with the customers based on their investment. In the communism, it is basically the sharing the outcome of the investment or whatever it is. So here, customer cannot deposit more than certain limit, whereas in capitalism and Islamic, you can deposit any amount. But in communism, there is a limit. Like person cannot get more than certain interest, they cannot deposit more than some amount. So their interest or profit is limited. Like it cannot go up to certain amount. That is the main thing. And in capitalism, as I told you in upfront, capital plus interest is certain. Like we know that you will get apart from capital, there will be some interest also. And Islamic final profit is not certain. Sometimes you make it zero, but your capital is certain. Profit may not be certain. In communism, again, interest is not certain because that is also again based on the outcome of the business. In capitalism, for loans, money is directly credited to customer account. Meaning, when you go for a loan to the bank, you ask for some reason. It may be a personal loan, car loan, or home loan. The money is directly given to customer. In some cases, where home loan money is credited to the uh, builder, or car loan, it is credited to the, but in case of personal loan, it is directly given to the customer will take the money and do whatever they want. Whereas in Islamic, the concept is not like that. Islamic concept is like their money is not directly given to the customer. Customer comes with some requirement, so bank will try to uh, try to uh, sorry, bank will try to solve it by purchasing or doing that to the customer, so that customer is not directly getting the money from the bank. Instead of that, bank buys the product or solves the problem with the money and gives to the customer, and customer has to repay it back. In communism, again, the money is directly given to the customer. In capitalism, in case if you don't pay as per the schedule, penalty is considered as income. Like in case if you miss on some EMI, or if you don't pay the installment, the penalty is applied on the outstanding amount, that is considered as income. Whereas in Islamic, in case of such payment miss, there is a penalty applied. But that penalty cannot be considered as income for the bank. That will go to the charity. Whereas in communism, penalty is considered as income. And in capitalism, repayment with interest is must, even if business is lost. Like you are purchasing land, or you are taking a personal loan for some investment. Whether you make a profit or not, you have to pay back the interest as per the agreed. Whereas in Islamic, bank is treated as a partner. As I told you, like bank is not directly giving the money to you. They are purchasing, or they are doing an investment along with you, and then you are doing the business. So in that case, if business is good, then you are sharing the profit with the bank. Uh, this is the concept wise, but in actual banking, it may not be possible. So eventually, they are also following like capitalism, but it goes with the fixed rate kind of thing mostly, whatever I have seen. And in communism, most of the business owned by the society, so no private ownership. So uh, all property or everything, it is all subject to the government thing. So nobody owns privately more than certain limit or what, there is a limit for individual. So that is the major difference between these three category of banking concept. Now let us see the basics. What is there in the Islamic? All practices are governed by the Sharia board. There is governance board in the every bank. That all certified by the Sharia Islamic concept system. Board members will be there. They have to approve the each and every product, and it should be as per the Sharia law and everything. And it is interest-free system. There is no wording called interest. It's all called a profit. Why it is profit? Because it's a business done together with the customer and the bank. So whatever the business outcome is called a profit. So there is no interest in this Islamic banking concept. And the third thing is bank and customer forms a partnership for deposit or loans. So when customer goes for a deposit, so he is partnering with the bank for their investment. If customer goes for loan, then bank is partnering with the customer for customer business. So this is how it works. That's why it's called profit sharing. And another thing is the in finance or loans, the money is not directly given to the customer. Let's say customer comes for the personal banking, then what bank does is internally they buy a metal on behalf of customer and they sell it on behalf of customer. Whatever the sold money is given to the customer. So this is how they achieve the Islamic concept in the banking world for the personal banking needs. Whereas in the other car loans or property loans, money is directly paid to the uh, vendor, either builder or the car dealer or something. So the money is not directly given to the customer. Whereas in the personal loan, indirectly they are achieving the capitalism market. Money is directly given to the customer account. But before going to that, they purchase a metal and sell the metal, and whatever the sold metal is given to the customer. It is as good as like customer wanted to buy some metal, so bank is purchasing a metal on behalf of customer. Bank itself sold the metal and then gives the money to customer account. And another thing is some certain business activities are restricted in Islamic concept, like alcohol, pork business, pornography, and gambling. These kind of activities are restricted. If some business activities involves this kind of thing, then they don't allow to do such transaction in this. So let's say if I want to trade alcohol, that is not allowed. If I using a Islamic credit card, purchasing alcohol in the bar, such kind of transaction should not be allowed. So gambling events, the merchants are categorized based on that. So based on that, some merchant categories are not allowed to use the Islamic cards. That is all conceptual wise. And penalty recoveries are contributed to the charity. If any payment is missed by the customer, then the penalty is applied by the bank for the not honoring the payment. So that goes to the charity and not considered as a income to the bank. And charges and fees are exist. So other forms of having income is like the customer is doing a transactions and then I apply the charges and fees. So these are the other forms like SMS charges, relationship fees, monthly fees. So these kind of things are the income to the bank. So these are the ways to make the profit for the bank. And now let us see what are the different types of accounts and deposits available. The first thing, again, we are seeing at the high level. So first one is RIA and UAA. What is RIA is restricted investment account and unrestricted investment account. Restricted investment account is purely based on the Islamic concepts, it is all invested only on certain allowed uh, business activities, and unrestricted, again, broadly, it expands, but not up to that, as I told you, like alcohol, pornography, pork business. Those things are not done, but other activities are allowed. And the second thing is card account, where I keep an account and I don't get interest. It is like a current account in India or say other countries. Or in some countries, current account also get some interest. But in card account, there is no profit or interest paid to the account. Whatever the money you keep it, just keep use it. Bank doesn't pay any interest or profit to the account. And then next one is Vadia and Amanas. These are the like only safekeeping. This is similar to card, but this might have some charges and fees, because this just acts like a custodian, like a locker facility, where money is kept, or some items are kept, and only charges or fees applied, flat fees or something like that, based on the tenor or whatever thing. And the last one is Wakala. This is nothing but, like a savings account, where you keep amount. That amount is invested by the bank under allowed categories. Whatever the return from the investment, that is shared with the customer. So even deposits and savings account, some categories will come under this. So that's what all the banks offer, these kind of varieties. So customer can choose whatever they want, and based on that, if they want to make more money, then they go for wakala kind of thing. And generally, concept is money cannot make money is the concept by the Islamic thing. So money should not make money. That is the main concept. So that's why they say like, profit, where they invest in something and the return is shared with the customer. And here we'll see some other Islamic instruments, like first one is Taisir. Taisir is nothing but overdraft concept, where if you are holding a salary account, some percentage of the salary is given as advance. So they call it as advance salary. Let's say if you are drawing 50,000, so they may say like 20% can be drawn before certain days, like 10 days or 20 days before that, and then that money has to be settled when the next month's salary or second month's salary is received. So it is given for the short period. It is similar to overdraft concept, which is available in the capital market, capital banking concept. The second thing is sukuk, where these are called security bonds, which is available in for the investment purpose. This is again Sharia compliant, where, as I said, like only the limited, restricted businesses only allowed. And the third thing is credit cards. Again, credit cards are there. There are multiple varieties like Ujra, which is only fees based. For every transaction or monthly fee, something will be applied. And Ijara, Kafala, Card, Vadia, and we have seen all these things earlier. What is the definition? And funds and derivatives, again, these are also available. Investment pool on a performing entity, like uh, money is pooled, no, multiple account, different type of account variants. They invest into some pool, and then whatever the pool makes the profit, that is given to the different type of products. They have a weightage and everything. Let's say I have three different account classes or three different products, savings products. Those three product money is pooled into one particular investment, and then based on the weightage of each product, profit is returned back. So that kind of thing. And the last thing is microfinance, where the objective is to help poor and small industries, where they're little liberal on giving the finance, and they target to help the poor and small industries rather than the big industries. And next thing is we'll see the finance and loans concept. How what are the different varieties? And there are two major types. The first one is the profit and loss sharing, where customer and the bank, involves into the business activity as a partner mode, and the profit or loss is shared. We'll see the profit loss sharing concept. First one is Murava. This is nothing but actively um, customer is managing the business, and bank is just a silent partner where bank is just paying the money to the business to some certain percentage, and customer is managing the entire business. So bank is acting like a silent partner, and customers acting as a managing partner, who runs the business, and whatever the profit comes from the business, uh, based on the agreed percentage, the money is shared with the bank. And the second thing is Musharaka. In this, all partner contribute in money plus management, wherein bank also contribute some amount, and they also involved in the business, like making the decision, and they have to approve some decision, and so they also involved in the management activity, but primarily run by the customer. But when it comes to the decision making, bank also has to sign something. And then last thing is the diminishing musharaka. One partner slowly increases the ownership, whereas in some cases, like to start up the business, maybe primarily bank will hold more ownership, and slowly customer may increase his stake in the business, and then he can take over the entire business after a certain period. So this is the diminishing musharaka. So whereas in the previously we have seen musharaka where from the beginning till the end they will have the same percentage. Diminishing musharaka is slowly customer will take over the business after a certain time. And the second thing is asset backed. This is like a property loan kind of thing, property finance. First one is Murabaha, where bank buys goods for the customer, and customer repays it in the installment, similar to your housing loan, we can say, or for personal loans, where customer wanted to purchase something, or he wanted to go for, he has some function expenditure or something like that. So in that case, bank buys the metal and sells the metal and gives to the customer, right? So and then customer repays it back with the profit, agreed profit. And then second thing is Musavamsa. Musava, this is nothing but customer doesn't know the actual price of the good or the property, and bank buys it on behalf of customer, and makes a deal with the customer to repay it back with a certain amount. So in this case, like a bargain thing where customer doesn't know the actual price of the purchased item, and he agrees to pay with some agreement. Because bank, as a bulk purchase, bank may make some reduced price purchase, and they can negotiate very well, and that negotiation is what taken as a profit by the bank. And the next thing is Istishna, where this is mainly for the manufacturing industry, where slowly money is given to the business, and then recovery is done very later point. And Tavaruk, where bank purchase asset, sell it to the customer resell it and pays back to the bank. This is similar to the what I told, like first thing, personal loan, but here it may be a real estate thing, kind of business, but this is very uncommon. Like this is not seen in many of the banks. And the last thing is Ijara. This is simple home loan kind of thing, we can say, where and this is called leasing or rent. This is not proper, mainly owned by the customer. Customer is taking some property for lease, so he or rent. He pays the rent for a certain period of like 10 years, 15 years, or something like that, and then after 10 years, he will own the property. So this is mainly for home loan kind of thing. And this is it. Whatever we have covered is just an abstract. Islamic banking concept is very wide. You can go through some online manuals, get into the more detail. And this concept is growing in nature. And major countries are Malaysia, UAE, Saudi, Gulf countries, and even now African countries also started coming up with the Islamic banking concepts. Wherever the Islamic population is more, and people are interested to do the Islamic banking. And thank you. In case if you have any question, please put it in the comment box. Thank you.